Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Yatin, I can see the smile on your face, given the fact that we've seen a very strong recovery coming in on the Lal Street after what can be dubbed as a Black Monday for our markets and Asian markets as well. But there has been a strong recovery, not just across Wall Street. Why I say Wall Street is because from the session lows, the Dow, Nasdaq, S&P 500, all three recovered very strongly, right?
True.
With the Nasdaq, in fact, ending in the positive territory. Even if you look at the US futures, I think all of them are trading with gains of somewhere around 1.5% or thereabouts. Of course, there were some rumors that Trump would pause the tariffs for 90 days. That was, of course, just a rumor. But within
Yes.
15 minutes, we saw very strong or very wild gyrations in the US market. But nevertheless, ended off session lows. And we saw very strong recovery coming in across Asia as well, with Japan rallying somewhere around 6%. That's because, Japan has emerged as the first major economy to secure priority tariff negotiations with the US, right? The Trump. Because of that, we saw 6% jump across, the Japanese market, Korean markets, Hang Seng, Shanghai. All of them were in the green today. Even European markets started the day on a positive note. But for our markets in particular, the swing high for today, 22,697. So we came very close to 22,700 as well. Didn't really, hold on to all of those gains, but nevertheless, it was an over 350 point recovery today. 22,500, we've managed to defend that level. Broad-based gains, mid and small cap indices gained in excess of 2%. Breadth was extremely strong, 6 is to 1. That was the NSE advanced decline ratio. All the sectors were participating in the recovery. I think investors are bargain hunting now in beaten down sectors. Auto, realty, IT, all of these stocks were in the green. Among gainers, Geo Financials, Shriram Finance, Cipla, Bharat Electronics on the back of an order win from Indian Air Force, Aisha Motors, Adani Enterprises, Titan on the back of strong fourth quarter update. A lot of these names were among gainers. In fact, just one loser today on the Nifty. I think vis-a-vis yesterday is only one gainer
Yeah.
on the Nifty. But broader end of the markets had quite a few movers and shakers. The likes of Keynes Tech, Vijaya Diagnostics, all of
Yeah.
them were flying high. I think
Yeah.
take us through some of them.
So, if you look at the Nifty 500, we had stocks like Z, Cholamandalam Holdings, Keynes Technologies gaining in trade anywhere between 8 to 10%. On the losing side, we had Delivery, and ever since the acquisition news has come in, the stock was slightly nervous, and today 7% down for that stock. Probably the markets are not liking the acquisition deal on the quick commerce platform Delivery. Is something that the overall Indian government is focusing on, and electrification is where the Delhi government is focusing on. So they are looking to not only electrify the Uber Olas in Delhi, but also the three-wheeler components as well. When it comes to other stocks, BSC was one of the actively traded counters, 7% higher for that one. Indigo Airlines, that stock hit a fresh 52-week high, almost 4% higher for that particular stock.
Okay, those were the movers and shakers. Of course, oil and gas stocks also in focus. IGL, of course, as you mentioned, that Delhi government looking to phase out CNG-based autos. But let's focus in on stocks that are on our radar. Starting with Titan, that was shining bright on the back of strong fourth quarter update. 25%. That's the standalone business growth for the company, led by strength across its key businesses. The stock, in fact, want to point out, was at a 52-week low yesterday, but managed to stage a good rebound. Although it is still 18-19% off its 52-week highs, Yatin. But yes, this fourth quarter update, brings forth some optimism after the kind of selling that most of the Tata Group stocks saw yesterday. Particularly for the jewelry business, the sales grew 24% on a quarter-on-quarter YOY basis. I beg your pardon, year-on-year basis in the fourth quarter, and even the gold coin sale was up 65%. Yatin, despite a significant increase in gold prices. Rise in gold prices actually helped boost sales of plain gold jewelry. In fact, gold coin sales jumped so much because customers are looking to store more value, because of which they are buying more coins. The sharp rise in gold prices did affect affordability for some buyers. As a result, the number of buyers went up only by a small margin, but those who did buy, gold coins and plain gold jewelry, bought more of it.
Hmm.
Even the number of buyers may have not increased by that quantum, but the amount of buying had gone up really. Uh, in fact, average ticket sizes went up by double digits, so to say. The studded jewelry also posted double-digit growth. Solitaire segment, which had not performed that well in the previous quarters, managed to stage a noticeable recovery in the fourth quarter as well. Consolidated retail network grew by 72 stores in the fourth quarter. Now, the total store count for the company stands at 3,312. The watches and wearables business also did well, 20% growth here on a year-on-year basis. Brands like Titan, Fast Track, Sonata, all of these contributed pretty strongly. Eye care business also did well, 18% growth here, thanks to strong demand for international brands and better online sales as well. Emerging businesses, if you look at that end, the fragrances business also did well, strong growth of 26% on a year-on-year basis. Even if you look at the Carrot Lane, growth, it grew in excess of 20%, driven by healthy growth in studded portfolio as well. And of course, the Titan's focus on multi-brand approach and digital growth as well continues to work in its favor, especially among value-conscious shoppers. Motilal Oswal, just reading a report, they had a buy rating, and the target price that they have laid out is 3,800, which implies a further 26% upside. So yes, all the stock may be somewhere around 18, 19% off its 52-week highs, but the brokerages are positive. And of course, gold prices, that's where investors have found refuge. Amid volatility, the gold prices have been on an upswing, but that has also aided Titan, given the fact that the gold coin sale has gone up, and although demand may have suffered a bit because of the high prices, but for now, hasn't really impacted the numbers as much.
Yes, and Titan, that stock clearly has seen the least amount of market share, loss also in the recent times. And also, if you look at the market capitalization in the Tata Group companies, TCS, Tata Motors have got impacted adversely because of the kind of trade wars that we are seeing between countries. But Titan is one stock, obviously oriented towards domestic consumption, and the market cap loss also hasn't been that big so far for this particular counter as far as the Tata Group is concerned. But moving from jewelry and FMCG to banks, because this is one sector which has clearly outperformed the last 5 trading sessions, especially in the month of April. We have seen less amount of selling in financials because continuously a lot of domestic mutual funds are lapping onto the shares of banks as well as NBFCs. Specifically talking about Goldman Sachs report on banks, they believe that the near-term data points could remain soft, given the fact that there is sluggish credit growth. However, the impact on net interest margins could lead and lag, given the fact that the deposits are now starting to pick up. So this is one portion that we'll be watching out for, because the cost of deposits clearly will be impacting the net interest margins. Obviously, the RBI policy, which is going to come later now, that would also determine how banks perform. But Goldman Sachs believes that we are at the bottom of the cycle. Axis Bank, they have upgraded the stock with a buy call. Target price is 1,228. When it comes to NBFC space, PNB Housing is something that they are looking to buy. They have upgraded that stock as well with a target of 1184, which means 15-20% kind of upside from the current market price. And when it comes to SBI, they have maintained or rather upgraded the stock to a neutral, because they feel that the risk reward ratio for SBI is now almost fair. So they haven't turned buyers in the name, but yes, still upgrade coming in for all of these names that have was spoken about. Banks and NBFC is something still brokerages believe on the basis of valuations could be attractive at this point.
That's true, Yatin, and also that can be attributed to the factor that the RBI has been very proactive in terms of liquidity
Yes.
management. Although rate cuts may be more aggressive now, given the
Mm.
fact that there are tariff-related uncertainties, and that could impact growth
Yes.
as well. But even then, I think Goldman Sachs has said that the EPS cuts will end in the first half of FY26
Mm.
for some of these banks as return on assets stabilizes. But on top of that, let's also talk about the oil and gas sector. We were talking about OMCs yesterday also. I think there has been an excise duty hike of 2 rupees on petrol and diesel that was announced yesterday, although in the dying hours of market hours. And of course also the fact that LPG prices have been hiked by 50
Mm.
rupees per cylinder. Just to put things into perspective, although the news is a day old, but brokerages came out with their notes today to put into perspective as to why they would not be cutting their earnings estimates just yet. Just to put things into perspective, normally when global oil prices fall, it can reduce the cost of fuel in India, particularly the cost of production for these OMCs, and increase their retail margins as well. Now, this will enable the government to raise more revenue from an excise duty hike without increasing the burden on consumers. And that means the extra profit would go to the government, and the consumers will not be burdened as fuel prices will be steady at the pump. Now, despite the excise duty hike, the combination of lower global crude oil prices, of course, sub $65 now on Brent, uh, the profit margins will remain strong. But the government intervention increases the perceived risk around policy uncertainty or unpredictability for
Mm.
investors. That's one point that has been flagged off by brokerages. The collections for excise duty, which will be around 30 to 32,000 crore rupees, will be used to pay LPG subsidy. Remember, there was no announcement in terms of LPG subsidies in the budget, and because of which the OMCs were disappointed, and we did see a stock reaction as well. But now with the LPG hike, losses on cylinders that OMCs incur will also come down
Mm.
by 50 rupees. Marketing margins will also come down, but they are already at supernormal levels.
Mm.
So that will not impact earnings as such. Motilal Oswal does not anticipate any impact on earnings estimates due for these companies. In fact, they're saying that current marketing margins average above 10 rupees per liter, which is significantly higher than their assumption of 3.3 rupees per liter.
Yes.
And because of that, they will not be cutting earnings estimates. Even HSBC, they are also recommending their buy calls on some of these names like HPCL, BPCL, and IOC, although they've cut their target price slightly because of the government intention
Yes.
and increase in risk perception. But all in all, marketing margins will not be hurt, and the LPG subsidy that will be met by the government, and the losses that they're incurring on
Mm.
cylinders will also come down.
Yes.
So for now, not impacting earnings, which is why I think we saw such a good rally
Yes.
on OMC shares today.
And more importantly, Nandita,
Hmm.
the assumption for crude oil prices
Hmm.
in the trade war,
Hmm.
for a brokerage report that I was reading, I don't remember the name of the brokerage, but
Hmm.
they cut the estimate on crude also
Hmm.
from $70 a barrel to 65.
Hmm.
So if crude was to stay at $65, probably at this level, a lot of money or profitability could be seen for most of these oil
Hmm.
marketing companies.
All right, good gains. Then yesterday we saw a knee-jerk reaction, but today we saw good gains on some of these names like IOC, BPC, and HPCL. But I think with that, we've come to the end of this edition of Closing Bell. Today was a good day. Let's see what tomorrow brings. We're taking each day as it comes now,
Yes.
Yatin. Nothing to predict here. But hopefully, we will continue with the up move tomorrow as well. Although we have the RBI policy to watch out for, lots of announcements to watch out for.
Correct.
There could be of course, rate cut, a 25 basis point rate cut. There could be a change in stance from neutral to accommodative. There could be a cut in growth forecast. There could be a cut in inflation forecast as well.
Yes.
So yes, in fact, a lot of announcements to watch out for at 10 a.m. tomorrow. But we'll be back then tomorrow 9 a.m. with opening bell. Have a good evening and come back and join us tomorrow morning. Thank you for watching. Welcome back to this Money Control live stream. I am Nandita Khemka, and you're watching, this live on what to expect from the RBI policy this time around. Of course, it's the first policy of FY26 tomorrow, 10 a.m. The MPC meet outcome, will be, of course, taken through by the RBI Governor Sanjay Malhotra. Expectations are that there will be a 25 basis point rate cut, but a lot has changed globally that could pose fresh challenges for the RBI governor. Trump's tariff announcements, harsher than expected, concerns over a global economic slowdown, and the spillover impact on India. These are some of the challenges that the RBI governor will face. So, what should one really expect this time around in terms of the measures, commentary, and the future trajectory as well? To put that into perspective, we have with us Lata Venkatesh of CNBC TV 18, as always. Lata, lovely to have you here on Money Control once again. A lot has changed globally. A lot of uncertainty when it comes to global growth.